All right, guys, welcome to Trading the Close. Your host today, not Toni. She's out for the day, but I am stepping in to make sure I can fill you in on all of the key action. So here we are trading the close. The market's generally very quiet. Again, one of those volume days on the S&P 500 where it honestly almost seemed like the markets were asleep or on holiday. So we're going to take a look at all the keys of the day. We're going to look at gold, silver, Bitcoin, as well as the stock market. So what I'm going to do is follow me over to the chart and we're going to get right into it. So first and foremost, I want to talk about the S&P 500 today. So S&P 500, what we can see here, guys, is that generally we started strong on the day with a beautiful 3-bar surge, 1, 2, 3 on the 10-minute chart. Remember, the 10-minute chart, each of these is one 10-minute period, and that's why we call it the 10-minute chart. So 3 bars up, sideways consolidation, and basically the same move to the downside. If we look at the S&P 500, this is where we closed on Friday, and we're basically flattish. I mean, give or take, maybe slightly green on the day. So overall, it's been a relatively uneventful day, except for a few key stocks. One of those key stocks I want to bring to your attention is JP Chase. And again, JPM, we had a big event. In fact, I wrote about this on my financial news section of Verified Investing today. Take a look at the drop on JP Morgan. Look at that nasty drop, down 4.4% or $9.15. Now, Jamie Dimon came out. There was a big conference for JP Morgan today, and the one thing that I cheer him on is that he said, he was asked, are you guys going to do these big buybacks? Will you buy back, 20, 50, $100 billion in stock? And he said, hell no. And he talked about this, and this is what buybacks are supposed to be used for. Buybacks are used when the company stock has been decimated because of market conditions and it is undervalued. And that's when buybacks are supposed to be used. Unfortunately, in this day and age, buybacks are used to artificially inflate earnings numbers per share, and that's what we've seen from Google and Apple. I mean, Apple just announced $110 billion in buybacks, and heck, the stock is basically within 5 or 10% of all-time highs. That is not historically when buybacks are useful. You waste money. Wait till your stock is down 50%, which inevitably happens, and then buy back double the amount of stock. That's much more beneficial to shareholders. Now, again, him saying this, the market didn't like that one bit, right? I mean, here we have this big move to the downside. If we flip over here to the 10-minute chart, I mean, just look at the selling since that came out right here, down, 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 down. Now, what I love showing you guys is that if you go to your daily chart, this was a very easy prediction. Take a look at the channel. All right, so we basically have a channel here where if we take this low here and connect it through the lowest point here, so we're talking about in 2022 when the markets bottomed right down here to 2023 when the markets had their second bottom before the latest bull run. If you take those two lines and you drag a parallel up, you get this exact high, and going into this announcement, that exact high. What happens to JP Morgan? It collapses off of that. That was resistance. Look at the last time it hit it, right there. So in theory, you should expect the same result. That's the beautiful thing about technical analysis here at verifiedinvesting.com. We ultimately guide you to understanding probabilities. All right, another stock in motion today, NVIDIA getting multiple price target upgrades today between $1,100 and $1,300. The stock is up about 2.4%, not a huge move, but my point is, again, there's two ways to look at this. One is that these analysts are talking the stock up because their big players want to unload into the buyers that it creates, and it did create buyers today, or maybe they know something. All right, now for me, I say, hey, listen, I don't know which one's which, so I go with the charts. The charts, again, we have this trend line right here, and again, until proven otherwise, this is the line I'm following right up here. You are in between here, so you could kind of gyrate like this, right? But at some point, we either have to break out or break to the downside. You're also coming into double top right up here as well. So again, for me, it's hard to know what earnings will be or how the stock will react. However, I continue to be a believer that margins over the longer term will contract. It's hard to keep margins. I think margins last quarter were 77%. I know new chips are coming out every day from other competitors. And again, eventually those margins are going to contract and you will see a downward move. The question is, will it occur on this earnings or will it be a quarter in the future? We will find out. All right, so markets again are in closing mode. In fact, it looks like we've just closed. We do have earnings coming out from the likes of Zoom. Zoom earnings after the bell here. We'll see what that does. So far, no movement. Palo Alto Networks, which is a security player here, that again initially pushing up a little bit, but let's watch and see. I don't believe earnings are out just yet, but it certainly had a nice day today, a nice move up into earnings and with a nice little short covering rally into the end of the day. Now, quickly going to the daily chart of Palo Alto, this is a tricky chart. So a lot of times people look at me and say, well, tell me, what do you think? It's going to go up or down? What's the probability? In this situation, we have support down here, right? Right here. And then we have resistance at gap fill up here. It's kind of equidistant between support down here and resistance. I honestly don't have a good bias on this. And so essentially you have to understand that you may look at 100 charts a day, even 500 charts a day. There may only be one or two that are high probability setups. That's just the nature of the beast, and that's just the way it is. So again, it basically doesn't mean, it just means you don't know with a high probability which way it could go. It could be closer to a 50-50, whether it rallies or falls on earnings. All right. Let's talk some silver. Silver continued its upside, but you would look at this daily chart and say this could be a doji. The one thing I will say, now dojis, for those of you that don't know, those can be small little signals of a small reversal or a pullback. The one thing I will say is that silver has now confirmed, this is big, silver has now confirmed above this breakout zone. So this breakout line here, this is the $30 level going back to 2020, and it has now confirmed above, right, based on today's close. So the kicker here is this, is that once you confirm, this line becomes major support, and in theory, if you can get a bull flag back in there, that is now a buying level, right? So you would essentially look to be a buyer here for a move to the upside and maybe higher highs there. Now in the camp of gold, if we flip over to gold, gold did not close above this level. So let's flip over to gold here. Take a look right here. Here was your previous topping tail high. We were above it earlier, but by the close here, we've come back below. And so as of now, you are not breaking out and negating the topping tail on gold. And it still means that this level here, this one right here is resistance, and this is key support. Notice these two lines are converging, which means eventually price will either have to break out or break to the downside. All right, next chart I wanted to bring up was palladium. Palladium has been my favorite sleeper of the metals, maybe getting a breakout right here. It's unconfirmed, so I'm going to be watching, but I love the move above this level. If you look at the palladium chart compared to even platinum or gold or silver, I mean, look at this chart. Look at that. I mean, talk about a potential breakout from the lows of the chart down there. I personally like charts like that. Now, a lot of you guys want to talk some Bitcoin. Before we do that, I just want to show you copper. Copper's been a big player recently. Talk about inflation. Look at this run up on copper. Today, we had a little bit of upside. It finally looks like it's starting to stall out a little bit, but copper's a very wild commodity, much like natural gas is. We'll touch on natural gas in just a minute. And right now, again, a little bit of a move up today, but not a strong move, not a continued blast higher on that. Now, quickly before we get to Bitcoin, let's just touch base on natural gas. Natural gas, you can see I have all my lines on the chart here. Basically, natural gas did, and I talked about this in the game plan this morning, is that you have natural gas that is going to go up to the 618 Fibonacci level. That's exactly where it went today. So we were much lower earlier in the day. It went right up to that 618. Now, there's also a gap fill, which you don't get gaps on commodities very often. It has to be a Friday close to a Sunday night open. But in this case, the gap fill is just about 8 cents higher as well. So this area right here to me is massive in terms of resistance on natural gas. Doesn't mean it can't break it. It just talks about probabilities favor some sort of pullback. All right, lastly, we'll go over Bitcoin, then we'll look at those two earnings and see if they are making moves here in the after hours. Bitcoin, look at this, guys. And this is perfect, right? We talked about the inverse head and shoulders here just days ago, how that was bullish. We got the breakout. We knew this channel was bullish. And look at the move up. We're now piercing this upper level of resistance on Bitcoin. If it can close above here, I do think it opens the door to touching 74,000. And if it can really keep its mojo and stay above this line. So let's say it goes up here, right? As long as it stays in this upper range and doesn't get below this line, you would continue to be bullish on the chart here of Bitcoin. So great stuff for Bitcoin, guys. Again, beautiful move to the upside. Now, quickly touching base. Ooh, look at this. We've got a big drop initially on Palo Alto down to 300. From 324 close down to 300. Now a little bit of a bounce back here off of the lows, but here we go. We're starting to come down. So this is the action that I love as a trader. I'm always watching for levels. So far, not a big enough level, but remember, it was a 50-50. What would we do? Basically, we would look back towards this low down here on the daily chart at 265. It's a long way away from there, but that to me would be a big level to watch. All right, and lastly, let's touch on Zoom here. Zoom is selling off a little bit on earnings, not a huge move on earnings, but nonetheless, looks like it popped initially, now selling off, now starting to bounce up. Doesn't look like too much movement here on Zoom at this point in time. Again, fluctuating, maybe down about $1 from the close, maybe not even $1. So we'll watch and see. But you can see again on earnings releases, the reason why you get these whips, oh, there it goes even more so to the downside, so it's moving down a little bit more, is because the algorithms and the computer programs read the releases very quickly and they'll react based on keywords in those releases. And ultimately, that's where you get these crazy moves. And then as it gets digested, they can move in the opposite direction. It's why earnings are so hard to trade, folks. They really are. But right now, again, Zoom is coming down here and it continues to see some selling pressure. So we will keep an eye on this as well. Wow, lots to discuss, guys. As always, wonderful to be here, stepping in for Tony on Trading the Close. But it is now time for me to say goodbye. So thank you as always, guys. I appreciate you tuning into Trading the Close. Come check out verifiedinvesting.com, and we'll see you tomorrow. Take care.